Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Okay, some other questions that we have. Now, sometimes you actually can receive a credit doing the skip strike butterfly, but once again, respect the market, folks. Never fear the market, always respect the market. And what I mean by that is yeah, you're getting a credit, but just understand that you have more risk to the upside if you're too right, so to speak. Okay, from Daniel, can you make a condor with a greater range without it becoming a short condor? You can go out as far as you want with condors. If you want to go, you can make these as far out as you possibly can. And just on the S&P 500, some people go out 8 and 10% in a month. Now, in reality, that's not a big deal in this marketplace, but it can and does exist. Do pattern day trader rules apply to currency options? Yes, they do. Well, this is a good question from Vishnu. Are these considered 1256 contracts by the IRS, such as index options are? At this point, they are not. Now, from my understanding, and you may want to email education@ise.com to see where the progress of this is, but to my understanding, they are not as of yet. They're trying to get that status now. 1256 contracts are where you're taxed, instead of at all short-term rates, you're taxed 60% at the short-term rate, and, or I'm sorry, 60% at the long-term rate, 40% at the short-term rate. So it can be beneficial tax-wise. Now, the disadvantage of 1256 contracts, you're marked to market at the end of the year, meaning that in the eyes of the IRS, that you are actually selling the option on December 31st or whatever the last day of trading is, even though you may not have, and you'll have to be taxed on it then, for better or worse. Okay, another question. How tight are the bid-ask spreads? Well, they're usually pretty tight. Now, the other question is about volume. They're really picking up recently on the ISE side of it. Now, I don't have the exact volume or bid-ask numbers, but I can just tell you, trader to trader, this is a product that's becoming more popular. In terms of bid-ask spreads, I think just based on what you saw on the quotes, they look fairly reasonable. So it's not like some products to where you can drive a truck through the bid-ask spread. I know that the ISE has really given this all that they have. They really want to push this product, and they're doing everything that they can to keep tight bid-ask spreads on these, as tight as they can. This is a good question from Ken. What reason, if any, is the U.S. dollar used as the base currency rather than the euro, the Japanese yen, or whatever? Well, if you're trading the spot Forex, some of them, the U.S. is the base, and some of them, the other currency is the base. With this, one thing that the ISE did is they just said, you know what, we're just going to make the U.S. dollar the base for everything. And so that's just what they wanted to do, and that's their way of doing it. Okay, what other questions do we have? Okay, here's a question from Jim. How often do you delta hedge the option, daily or weekly? Well, it depends on what you mean by delta hedge. If you mean, like, let's say you're trying to neutralize gamma and stay absolutely neutral till expiration on every possible thing and be short time premium, then hopefully you're trading a lot of lots, because if you're doing it with very small lots, quite frankly, the only one that's going to get rich is OptionsXpress if you do it too often because all the commissions that you're doing on it. Now, if you're doing 100-lot contracts, then it's something to consider more often. So I would say the larger the lot contract that you have, the more often that you want to consider that. And once again, I want to emphasize consider because that's a very broad question in terms of what you would be looking to do. Okay, some other questions. Okay, here's a good question from Jim. Does one contract equal one mini or one standard lot? Well, the way it works, think of this as the stock world. So let's say that we were to buy one contract with EUI as the underlying. What that would mean would be the equivalent of owning 100 shares of EUI. Now, I know that there's no way that you can own 100 shares of EUI since it's an index and it's not an underlying itself, but multiply everything by 100, and that's the contract size. So technically on that CDD contract that we were looking at, it was at 123. Just multiply that by 100. Let's say just theoretically that you sold a naked put option on it at the money, then your risk would be just over $12,000. Okay, from Carlos, if I short €1 US dollar today, what would be the best hedge in case the US euro jumps? I don't know what I would say would be the best hedge. It's hard to say. I would say just make sure you use the right hedge for what you're trying to do. And I don't mean to dodge the question, Carlos, but with that, let's say that you're concerned with let's say you think that the euro is going to go to zero, let's say. If you think the euro is going to go to zero, then what you'd want to do is buy a call option on EUI. Reason being, it's dollar-based, so that means that as the dollar goes up against the euro, that you'll do well, or buy a call spread perhaps, or and pick the right strike price for it. So remember, you're buying a call option because if you're long the euro, then that would mean you would buy a call option to be long the US dollar. Okay, well, I think we're out of time for right now. How are we set on time?
Mike, you can go as long as you can, but I'm sure you have other things scheduled. But I think we had a lot of really great questions, and if there's an email that they can contact you.
Yeah, definitely. Just once again, I'll bring it up on the screen here. Education@OptionsXpress.com. Feel free to send an email there whenever you'd like. And yeah, I guess there are things that exist in this world besides trading. Is that really the case? They tell me that it does exist.
So we apologize if we couldn't get to everyone's question, and I wanted to, on behalf of everyone who attended tonight's webinar, I wanted to thank Mike for hosting, for presenting, and it was really great.
Okay. Well,
and I also wanted to thank everyone for attending as well. So Mike's webinar will be posted in our archives, so just make sure to visit that first thing tomorrow morning. It's at isc.com/archives.
Okay, well, thank you. It was a ton of fun, folks, and I think we did get to your. I think we did get to almost everyone's question. If for some reason we didn't, though, feel free to send an email. I answer my emails every day, so I'll be more than happy to help you in any way that I can. And, once again, I'm always grateful to work with the ISC. They're a great group of people.
Thank you, Mike, and thank you, everyone. Have a nice evening.
Thank you.
We'll see you next week. Okay, bye.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.